Yo, what's up, you guys? Welcome back to another weekly market breakdown. So today I want to give you guys an update on the situation that we have on DXY, the Dow Jones, the NASDAQ, the S&P 500 and gold, right? This is all from a technical and a fundamental perspective, right? So without any further ado, let's get straight into it, right? Now for this week, we obviously got some news, right? We've got a lot of news coming through, right? We've got the FOMC members speaking there, and then we've got some weekly initial jobless claims. There's a lot of data coming through, right? Now, if you guys remember this thing I posted on Thursday, last week Thursday, when the market was sitting at 105.228, which was basically this candle was printed over there, and I said this is exactly where if my forecasts are right, I think we should be around this level in September, right? This market has started to rally very aggressively ever since, right? The market has gone up 1% since the last time I said it was gonna move up 1%. And the reason why I anticipated this price movement, it is so simple, right? It is so simple. People tend to complicate trading, right? And it's not that complicated. There's two indicators that I do look at when I anticipate a move like this in the market, or where I can come out and confidently speak about these things. And there are two things: is looking at CPI data, and that is looking at interest rate data, or the mood around interest rate information, right? And we've seen CPI data kept on increasing. I've seen an article with you guys as well not too long ago about how the Feds is less likely to hike these interest rates, but inflation has been climbing, and now the Feds are more likely to start lowering these interest rates by the end of February. Now by the end of September. Now, if you guys read the article that I sent in the group, right? I just don't know which one it is, but I did send you guys an article there somewhere for the new yeah, I think it was this one here, right? If you read that article in there, you would have probably understood why I am confidently speaking the way that I do, but I don't know if everybody does read the article, right? Now, when you see a high CPI reading, that means that you can more or less expect the Feds to hike the interest rate. With that comes an increase in strength of the index. Now, because CPI is continuously on the rise, the Feds need to hike the interest rates. And the Feds did say that they're only going to hike the interest, they're only going to lower these rates by September. You understand now, right? That is why I came out confidently and I said we can expect this move to continue higher. And now that we are already here, I do see us probably going more higher, more higher. You guys don't understand this. It's such simple, it's so easy to understand, but you would rather believe someone that tells you he's got a 99% success rate as opposed to me. Now we're going to do this on the weekly time frame, right? Now, we can clearly see that the market is approaching a very strong level in the market, right? Now, we've had this level that basically acted as the resistance twice, and we're about to go there. And yes, we are going to go there. Yes, we are going to go there. This market is going to go there. And then we'll get a pullback. Then we'll get a move. Then we get a pullback. Then we'll get another move. Then we get a pullback. And then we're going to go until we see the Feds giving some sign, until we see some signs of inflation cooling down. There is no reason for you to look for a sell on the dollar index. Now, based on where we are now, like I said, I personally, Rolio, Jack the Third, do believe that we are still bullish on the index, okay? And I do anticipate a U-turn in the market when we get to this level over here, right? At least that level, we do have a gap there that we can expect the market to fall. But this was a very easy way to manipulate sellers because they trade support and resistance. Now from here, if we do get a pullback, I don't see a pullback lower than this level. but I do expect this market to pull back and continue lower. Now, I'd be a fool if I had to tell you that this market is going to continue all the way till there, because that would be a much deeper correction, and this move to the upside would then be still longer, right? So that's my outlook on the index. Now, the stock market also, let me remove this. The stock market also, if you guys remembered, I spoke about this information that the market has completed to the neckline, right? The stock market is so overbought, and this is a good time for the market to basically do the pullback that it needs to. Because why? There's going to be a lot of uncertainty in the market, and yes, this market is still going to fall. It is still going to fall like we saw it fall in the COVID pandemic, right? You know that song, your price is way too high, you need to cut it. This is a massive overly bought stock market, and if as the Feds continue to hike this interest rate to lower inflation, then yes, we can expect the stock market to continue lower. Now, we can firstly see the market had broken above resistance, came back, tested it as support. The market had also broken below support, and we can expect it to pull back as resistance. We got a massive impulse. So after an impulse, you expect a correction, and the best way to measure that correction is by taking your Fibonacci from the high to the low of this impulse that you see over here. You can see there we've got a 0.382 pullback that's lining up perfectly with its structure, anticipating that the bearish momentum is very strong if we get a pullback to that level, because it's lining up perfectly with that structural level as well. So next, we're going to go back to the daily as well. The best thing you can do for yourself is to educate yourself around fundamental data, because it will help you understand these things that I am speaking about, so that you do not get lost in these markets also. Now, here we go. So we are clearly bearish, but we can obviously first see that the market is currently testing here. Now, I would probably say, the first level that we can basically start to look out is going to be this level over here. So from here, I do expect the US30 to continue higher. Now, the way you enter this, if you haven't watched any of the videos that I did, is you apply the same principle of price action on the lower time frames. The NASDAQ still has some more room to the downside. We can see this market completed that information to the neckline, exactly like I said in the last breakdown. The index is still going to continue lower, unfortunately, right? This market is still bearish, and then once we get to this level over here, from there, I then do anticipate a move back to that level, and then we can expect this market to continue lower, and that's more or less where I'm going to see this market continue to. But as traders, we have to be reactive and not predictive, and learn to adapt to the ever-changing market environment. Here we've got everything is basically playing out the same except for the NASDAQ. This market is currently testing previous resistance as support. The market broke below support, and it's now back testing it as resistance. So from here on the S&P 500, what I would like to see is a pullback to this level over there. Again, if you don't know how to enter them, go watch the video where I told you guys how to enter them. And these are not signals. You might be an SMC trader that says, yeah, but you see the mitigating and the mitigating and the AVG and the GVG must fit. It's fine. It's fine. This is my outlook on the market, right? Any case, now we've got gold, right? Now there's not a war, but there's something that you have to take into consideration, right? Gold is considered a safe haven, firstly. Now, during times of uncertainty, investors tend to go and put their money in a metal or a currency like the Swiss franc that has shown potential to grow over difficult times. So they put their money where it's safe. Right? I hope Pandile is watching this video, right? What is forex? So when we talk about safe haven currencies, we talk about currencies that has sustained their growth throughout difficult periods. COVID, World War, all of that stuff. So investors tend to put their money in these metals and currencies like the Swiss franc, the dollar index, and gold. That is why you see in a situation like this, gold is bullish and the dollar index is bullish, because they are both considered safe haven currencies. And there's a lot going on in the currency world right there, right now. Let's continue. So for me, gold, to be honest with you guys, gold is very reliant on the information that we receive, that I am waiting for. So what we have here firstly is that we had a massive rejection from that level over there, right? Now we can see the market had printed resistance, broke above resistance. That resistance is now turned support. Now, the best advice I can give you guys is to obviously wait for a pullback to that level. Then on the retest, you could potentially start looking for sells. If this daily candle closes above this level, then we can expect the market to go and fill in that wick, because normally when you see a candle with a more than 50% body to wick ratio, that normally means the previous, that this normally means it's a correction on a lower time frame. So you'll see there we get an impulse. Sorry, there's the impulse, and there we got the correction, right? So I would just say wait for the daily candle to close, and then from there we can then decide whether we are bullish or bearish. That is it from my side. Thank you for your time, and as always, cheers for ears.